All right, so let's get started here. Oh, I hear Regina.
All right. Oh,
Hi. I heard you.
You're so awesome. Hey, everybody. Okay.
All right.
Or just text me.
All right. Okay, so we are going to continue on here today talking about Social Security, Medicare tax. And there's some, if anybody needs sugar, help yourself. So just as a reminder, so remember we've got, how did I put this up here? We have the employer portion, we have the employee portion. So first we have OASDI, Old Age Survivors and Disability Insurance, otherwise known as Social Security. And we have Medicare tax, which your book likes to refer to as health insurance or HI. And if you recall, the tax rates are 6.2% for the employer portion, 6.2% for the employee portion, total of 12.4%. And then for Medicare, 1.45% plus 1.45%. For a total of 2.9%, so 7.65%, and 15.3%. Now remember with OASDI, we have a wage base, meaning we are only subject to that tax on wages, earned income, during the year up to $168,600. So we've got our wage base, $168,600. Now, like I said, that applies to earned income. So if you have both W-2 wages or wages from a job, and you have self-employment earnings, those are both considered to be earned income. It's combined, that we're going to combine the income up to $168,600 on an annual basis. So that means we're going to accumulate that income throughout the year, and then once January rolls around, it goes back down to zero. So for every individual, for every year, that wage base is $168,600. This tax applies only on those wages up to that amount. This is called a regressive tax. We're used to what's called a progressive tax system, where the higher the earnings, the tax rate goes up. So the more you make, the more they take, is one of the phrases that's often used for a progressive tax system. There's also what's called a proportional tax system, otherwise known as a flat tax. Good example of that is like sales tax. If you spend $100, it's 7%. If you spend $1,000, it's 7%. It doesn't matter what that wage base is, that tax rate doesn't change. However, occasionally we run into something called a regressive tax, which essentially means the more you make, the lower that tax rate is. That's what Social Security tax is, because you've got taxes on the first $168,600 of income, but then your next tax rate goes to zero once you start earning over that wage base. So this is, like I said, this is an example of a regressive tax system. That gives you a little preview of income tax accounting and what we talk about in income tax accounting. Medicare, this is like a flat tax. This applies from the first dollar of income up to infinity. So this tax rate does not change depending upon the wage base, but OASDI does change depending upon the wage base, and we've got two tax rates. at 6.2%, or it's a 0% tax rate. Remember as well that for SECA tax, Self-Employed Contributions Act, the self-employed individual is going to pay both halves of these taxes, which essentially means this is their tax rate. So this is total or SECA. Those tax rates apply. Now, one tax rate that we have not talked about yet, we have another tax, another payroll tax. All of these together are called payroll taxes because they apply to payroll. Another payroll tax, which is the additional Medicare tax.
Okay, so you have to pay, and forgive me for this word.
Nope.
I'm sorry.
Nope.
So you have to pay Medicare tax and another Medicare tax?
In certain instances, yes. There is an additional Medicare tax. Now, this one applies to income, again, earned income over $200,000. So it doesn't kick in until your income reaches, for that year, reaches $200,000. Okay, so if you're, yeah.
So in reality, you are still paying Social Security tax.
Well, no, if your income is $200,000, you are now exempt. Any income that over that 168.6 for the year is not going to be subject to Social Security tax, but you will start to get hit with this additional Medicare tax once your income reaches $200,000. Okay, so you kind of have this sweet spot between 168.6 and 200,000, where the only payroll tax you're paying is Medicare tax. But then once you reach that 200,000 mark, which, fingers crossed, we can all reach that someday. I don't know what inflation's going to have to be like for me to reach that someday, but once we reach that income level, that's when the additional Medicare tax kicks in. So, and we're going to do some problems that involve that calculation as well. Okay, so the tax rate, so here's our base for the additional Medicare tax amounts over $200,000. It does not apply, the employer doesn't have to pay any of that. It's only the employee. And the tax rate is 0.9%. Be careful when you're doing this math because we're used to percentages as just being like, you'd think 0.09, but that's actually 9%. So when you're doing the additional Medicare, it's 0.009. So just be careful. So when you're doing the problems that involve additional Medicare tax, if the result that you get is more than 1%, you calculated it wrong. Okay, so you can kind of use that as a guide because that's easy to do in your head at 1%. Right? So $1,000, if it's more than $10, you did it wrong. So just as kind of a reminder, I say that because that's one of the common mistakes that I see students make. They just put that decimal in the wrong place. Okay? So we're going to go through a lot of problems today, a lot of exercises. So let's see here. Another thing, so what we're going to do, we're going to start simple. We're going to do some calculations based on an annual salary. Like, say, we've got Mary who makes $190,000 a year. What's the total amount of Social Security tax she's going to pay? What's the total amount of Medicare tax she's going to pay? And then we're going to go through some problems that are a little bit more complex where we are given, we have to figure out what the individual makes on a per pay basis and figure out what the Social Security and Medicare tax is for that pay date. And we're going to add some complications there by getting some of these salaries up to beyond the wage base and beyond the additional Medicare tax rate, so we can do the calculations of how much are we going to pay in that pay period, or how much is the employee going to have withheld during that particular pay period. Okay, so let's get started on some of these. One of the things I want to point out, so in your modules, Well, actually, before we start this, we're going to start with those simple calculations. All right, so let's say we've got somebody who has a salary. This is an annual salary of $150,000. We want to find out how much they will have withheld in Social Security and Medicare tax for the entire year. And start simple here. So we have our OASDI, Social Security and Medicare. How much of that $150,000 is going to be subject to Social Security tax?
All of it.
All of it, exactly. All of it's going to be subject to it because it's under that wage base. It's under the $168,600 wage base. So I'll put that up here. And I'll just as a reminder as well, we've got our base times rate equals our tax. Okay, and our OASDI base is 168.6. That's our annual base. So all of it is going to be subject to Social Security tax. What is our tax rate? How much is going to be withheld? What's the tax rate for withholding on Social Security?
6.9.
Close. You got the 6 part right? 6.2, exactly. So 6.2%. So we've got our base times our rate. We can multiply that out and calculate what our tax is. So 9,300. And then how much of that 150,000 is going to be subject to Medicare tax? All of it, right? All of it, and that's going to be the answer every time I ask you how much is subject to Medicare tax. All of it's going to be subject to Medicare tax. What's our tax rate? 1.45%. So 2175. So we can figure out how much, in a world where there is no income tax, federal or state income tax, that world doesn't exist, but we'll pretend for a moment, that these are the only amounts that are going to be withheld. So we know that the gross pay is $150,000. And then we have OASDI that was withheld of $9,300. Oh, I love a new marker. And then we have Medicare tax of $2,175 to get to our net pay for the year, whole year. We'll do some per pay period calculations. 138,525. Okay, so her net paychecks throughout the year, which she actually brought home, in our pretend world where those are the only withholdings, she would have brought home $138,525. All right. Let's get a little bit more complicated. Now, let's say that we've got an annual salary of $190,000. How much of that $190,000 is going to be subject to Social Security tax or OASDI? What's that? 168.6, right? Never is going to be more than that 168.6. Oops. How much is going to be subject to Medicare tax? All of it, right? So you can see here our base is different in each of these calculations, right? So, 10, 453, 20. And 27.5. So again, this is the amount that the employee pays. This is the amount that's withheld from their paychecks throughout the year. The employer is paying an equal amount of both of these. So again, we've got our gross, 190, and OASDI, 10, 4, 53, 20, and Medicare, 27. Did I get that right? 27.55, was that the same as? Yeah, I guess so. I don't know why I thought that was the same. So our net pay $176,791.80. All right. Let's do another one. Now let's say we have an annual salary of $215,000. How much of that $215,000 is going to be subject to Social Security tax? $168,600, right? That's why I didn't bother erasing the amount here, because that is not going to change. So for 2020, what are we doing? 2024 numbers? Are these 2024? Yeah. 2024 numbers, that's the maximum amount that would be withheld. 2025, remember, we get a different wage base every year, but don't worry about what that number is. Only worry right now about the 168.6, okay? Because that's the number you're going to use in your calculations. But keep in mind, it changes every year, right? I think it was, what, 176 something for 2025, and then goes to 183 something. It's just, you just keep chasing it throughout your whole life, right? But the good part is that means that additional amount is being taxed and is going to go into the system. Hopefully will benefit people going forward. All right, so how much of that $215,000 is going to be subject to Medicare tax? All of it. $31,1750. All right, now this individual is over $200,000. So what are they going to be subject to as well? Additional Medicare tax, exactly. How much of their total income for the year is going to be subject to that additional Medicare tax? $15,000. Exactly, because that's the amount over and above $200,000. You remember what that rate was?
0.9.
Okay, so 0.009, right? So it's 0.9%, exactly. So, well, 0.9% is how it's written. But then when you do it with the calculator, you're going to use 0.009. $135. All right, so over the course of the year, $215,000 gross, OASDI, 10,453.20. Medicare 3,117.50, and then we've got additional Medicare of 135. Whoops, 3,117 minus 135. So 201,294.30 is their net. Sorry, I know that's kind of low. That printer is probably in the way. If there's anywhere else I could. There's really no place else I could do that. All right. Now, so this is on an annual basis, but you know, we're not calculating on an annual basis. We're calculating each pay period, right? So let's do some calculations that involve figuring out on a pay period basis. Well, first off, let me see if they did. Yeah, we'll go through that. On a pay period basis. Questions so far? Okay. Interrupt me if you have questions. All right. So let's go back to our $90,000 salary, annual salary. I think that's what we started out with. And we have an individual who is paid on a semi-monthly basis. Okay. How many pay periods a year is semi-monthly? 24, right? So, how much is this individual paid per pay period? How do we do that calculation? We're going to divide the salary by 24. So they make $37.50 per pay. This individual is not over the Social Security threshold, so we know that all of their pay throughout the year is going to be subject to Social Security tax. Okay? Let's figure out for each pay what their Social Security and Medicare tax is. So we've got their gross, which is $37.50. We're going to use that as our base for this pay period. Okay, so for OASDI, we're going to multiply that by our tax rate. $232.50. Right? And then for Medicare tax, all of it's going to be subject to Medicare tax because we're not, I mean, all of it's always subject to Medicare tax. But for OASDI, all of it's subject to OASDI because they're not going to reach near that 168.6. So again, there's our base, 1.45%. $54.38. Now, be careful. I'm rounding it there, but make sure you read the instructions for your that's in your homework and as to when they want you to round. Okay, just be aware of that. I know we all have accountant minds, and so we're focused on the numbers, and sometimes we ignore the words, and then we get into trouble when we do that. So I'm just telling you to make sure you round it at the right point. Okay, so in order to calculate then what her net pay is, so we've got our gross of $37.50, and then we subtract these amounts. So we've got OASDI, $232.50, and again, we're living in our fantasy world where there's no other deductions, there's no other taxes that we're paying, and we've got our Medicare, $54.38, to get to our net pay. $34.63.12. All right. So for this particular individual, it doesn't really matter which pay period it is, right? Because they're never reaching that $168,600. This is going to be consistent for every single pay period. If that's all they're making, every pay period, that's it, right? So these amounts won't change. That net amount won't change. It gets a little more complicated when we get individuals who are eventually going to be making over that OASDI threshold, that base, right? Then we need a little bit more information. And I have got in here some steps for you. And we're going to use these steps for our calculations. These are our steps to calculate current period FICA. We need to know what pay period we're in because, like, if somebody is making $190,000 a year, well, for the first, I don't know, it depends on how frequently they're paid. Well, let's make it easy. Let's say they're making $240,000 a year and they're paid monthly. So they're getting $20,000 a month. Well, for the first, seven, I'm trying to think here. I'm trying to do math in my head. Sometimes it's hard. So for the first 8 pay periods, they'd be up to $160,000. It would be consistent. They would be subject to Social Security and Medicare tax. But then in that 9th pay period, they reach the $168,600, right? And then they start to exceed it. So some of their income's going to be subject to OASDI, some of it isn't in that 9th pay period. And then they're going to get to a pay period where, it would be the 10th pay period. Now they're starting to exceed the $200,000 point. So we no longer have to worry about Social Security tax, but we do have to worry about that additional Medicare tax. Okay? So what we're going to do, these steps are to help you to determine, and actually they don't, and I haven't done this yet. I need to add in the steps for the additional Medicare tax. I haven't done that yet. These are for, like, if it's between, this is just to calculate Social Security tax and the regular Medicare tax. Okay? But what we need to know is what pay period we're talking about before we can figure out what that withholding amount is. So let's go through. I'll go ahead and erase all this. So let's say we have an annual salary. We'll use the 190. And this individual is paid semi-monthly. We need to know how frequently they're paid. So we need to know what their annual salary is, how frequently they're paid, and what pay period is this? How many pay periods has there been? So let's just say that they're paid semi-monthly, and let's see, 190. Let's say this is the 20, I have to think here, 68, so, let's see, per pay, it helps if I know what they're making per pay. Whoops. So, not 90. Come on, Kelly. Seriously? 190,000 divided by 24. Okay, so per pay they make 79,1667. And I got that by taking the 190 divided by the 24 pays per year. So I'm trying to do the math in my head here. So 8,000, so 82. Let's say this is the 21st pay of the year. So they've got 24 pays during the year, and this is the 21st pay. So that would be, what, November? Something like that. All right, so here are the steps to do the calculation for the 21st pay. The first thing we want to do is calculate the prior period year-to-date salary up to the current pay, so it's not including the current pay. Okay, so what we're going to do is we have to figure out what they're making per pay. So we'll take the per pay amount times 20. They've had 20 pays up to now. This is the 21st pay. We do not want to include the 21st pay. We want to know up to today, but not including today, what they've made. All right, so 79,67, times 20, 158. It's not going to be enough. Okay, I'm going to change this. Sorry, it should be the 22nd pay. For my example, I need it to be the 22nd pay. Okay, so this is going to be 21. You saw that, didn't you?
Yeah.
All right, so up to today, but not including today, this employee has been paid $166,250.17. I'm sorry, 7 cents. I think I said 17. So that's our step one. Calculate the prior period year to date. So you take whatever the period salary is, multiply it by the number of pay periods they've had up to this date, but not including this date. Second step. This is how we calculate the current period, calculate the OASDI wage base, which is, what's the wage base? That's the tax rate.
Oh, 168.6.
Yep. No. There's our wage base. So that's going to change every year, but for our purposes, that's going to be the same. OASDI wage base minus the prior period year-to-date salary, minus this. That's how much they've earned up to now. That's how far they are into this wage base. What it's going to tell us is how much can they earn, how much do they have remaining to earn before they get to that wage base. So 168.6 minus 166. So 2349.93. All right. Step 3. To calculate the current period OASDI, multiply the OASDI tax rate by the smaller of. So we got to figure out which is smaller. The result in step 2, which is this, or the current period total wages, which is this. This is smaller, so that's what we're going to use. 145.70. This is our current period OASDI. Step 4. Now we're going to calculate the current period Medicare tax liability. Multiply the tax rate by the total wages for the current period, because all of those wages are subject to Medicare tax. Current period, 79.16.67 times 1.45%. $114.79. This is our current period Medicare tax. So, for the current period, again, we're in this fantasy land where there are no other taxes, no other deductions that we have to make. We have gross pay of $79.16.67, OASDI, Social Security, $145.70, and Medicare tax, $114.79. $76.56.18. This is our net pay. So that's how much is going to be deposited into their bank account, direct deposited or written on the check or what have you. Let's change this a little bit. Let's look at the 21st pay. So this is the 22nd pay of the year. So she's got, that's probably what, mid-November. They've got December left to do. But let's see what would have happened on the 21st pay to see what the difference is. So and I'm going to put this over to the side. So on the 22nd pay, we had a net pay of $76.56.18. So let's compare. Don't have to erase that. I do have to erase this. Okay. Just so I can show you the difference here, show you how this change of, once you reach that wage base, the difference that it makes in somebody's take-home pay. All right, so let's say it's the 51st, not 51st and pay. I'm sorry, the 21st pay. So we're going to multiply this by, we want to know what the year-to-date pay is up to this pay date, but not including. So what are we going to multiply this by? 20th, right. We're going to multiply by 20. So 79.16.67 times 20. 158.333. Is that 40? All right. Then we're going to take the OASDI wage base, 168,600, subtract 158.333.40. I'll do it this way. 10 to 66.60. All right. This is where we have to compare and use the smaller. So we're going to compare the result in step 2, which was 10,266.60, or the current period total wages, which is 79.16.67. Use the smaller to multiply by the tax rate, the OASDI tax rate. So in this case, we're not going to use this number, we're going to use this number. $490.83. This is our current period OASDI tax. And then the last part, we're going to calculate the tax on the Medicare tax. So 79.1667 times 1.45%, which this is going to be the same. I should have erased it, but $114.79. Again, current period Medicare tax. So to figure out what her net pay is on the 20th pay, I'm sorry, the 21st pay, this would have been the same as the 20th pay and all the pays up to now, because all of her wages are subject to the Medicare tax. So 79.1667 minus 490.83 minus 114.79. So 73.11. So again, 79.1667. Net pay for this pay, so that was the 22nd pay. 21st pay, net pay, is $73.11.05. She's going home with an extra $350 almost in that next pay, because most of her income's not subject to Social Security tax, right? That's why there's a difference. So it reached that point in that 22nd pay. So let's get fun and look at the 23rd pay. Okay? That I can do. Actually, Medicare tax will be the same. All right, so on the 23rd pay, so now, what are we going to multiply this by in the first step? So 22, right. So 79.1667 times 22. 174, 166.74. All right. Second step, we're going to subtract the wage base. I'm sorry, we're going to subtract the year-to-date wages from the wage base. But wait a minute. What the heck? We're getting into negatives numbers? That's okay. If the result is 0 or negative, then there is no OASDI tax during this pay period. Makes perfect sense, because she reached that wage base in the prior period, right? She reached it in that 22nd pay. Now she's in the 23rd pay. So, of course, she's not going to pay anymore. But so if the result is 0 or negative, there's no OASDI tax during this period. Skip to step 4, so you don't have to do step 3. Because there's no OASDI tax. There's only Medicare tax. So to calculate the current period Medicare tax, which we already did, $114.79. So we're not going to subtract anything there, but we are going to subtract $114.79. Oops. 7801.88. Merry Christmas. She's got a bigger take-home paycheck, right? So on the 23rd pay, I know I've got these backwards. Oh, I'll put it up here. 7801.88. So now, compared to her 21st pay and every pay period before that, right? She's bringing home almost $500 more, simply because she does not have to pay Social Security tax. on that amount because she's above the wage base. Okay, let's look at their examples. Actually,